Hello, oracles. Well, Tesla did break their upward trend. So, why did we break our upward trend? We got the FOMC meeting yesterday. Jerome Powell came out, and the Fed did not raise rates. They did say what I thought they were going to say and give us the indication that there's a potential for more rate hikes in the future. But there really wasn't any reason for this. So the whole entire market pulled back after the meeting. We've seen this time and time again. The market rallies into the meeting, rallies through the meeting. As soon as Jerome Powell finishes speaking, the market sells off massively. This is exactly what we saw yesterday, and that continued on through today. So there was some other information we got today. We got the jobs report that came out today, some information about the housing market, and then we've got the quarter coming to an end. So we've got a bunch of things that are not Tesla related. It's all macro environment related that caused the entire market to pull back and Tesla along with it. So we will get into more of these details in just a minute. All right, so looking at the charts, again, we broke this upward trend that we were on. We now have a gap that goes above us here to 262.46. So several gaps here, 262.46. Perhaps we fill that tomorrow. I don't know where we're going to go from here. Again, breaking this upward trend, we now have to try and create a new trend. Which way are we going to go? RSI is at 49.2, so right in the middle. So we can go either way based upon the RSI. Now, again, historically this year, we've been going from oversold to overbought to oversold to overbought. We have seen some dips go along the way in this. So maybe we end up just faking this out here and then we rally back up. Again, lots of uncertainty, do not know where we're going to go. So now, yesterday, Jerome Powell came out. Again, the Fed decided that they were going to leave the rates unchanged. But again, we've been seeing inflation creeping up a little bit. Nothing major. Oil prices really are kind of pushing things up a little bit more as well over that $90 mark. And we have seen core inflation coming down. So, based upon inflation data itself, didn't really give us an indication that the Fed needed to go up on rates. So they paused. But part of the reason why the market sold off after Jerome Powell stopped speaking was Open Skies pointed out here Fed pauses rate hikes. Fed officials see one more 25 basis point hike in 2023. We have been guessing November 1st on that. Fed projections show rates through 2025 at 50 basis points higher than previously projected. Markets pushed back first rate cut to September 2024. So previously we had the Fed was going to start cutting rates in the spring, Q2 of 2024. That's when we thought it was going to start happening. And then we would see those rate cuts progress through the entire year. But they have now extended that. The market's now anticipating that we are going to have rates higher for even longer. Again, if the Fed is going to be raising rates one more time, let's say it's November, they're then going to hold those rates higher for almost a year. Then we're going to see those rate cuts starting next September, 12 months from now. So if that is what is going to be happening, the market is now pricing this in, hence the big sell-off that we have gotten. Now, historically, September is typically the worst month for the market, and this week in particular is the worst week of the worst month for the market for the entire year. Now, reasons for that, historically, when you get into election times, we're going to cause uncertainty. We don't have elections going on right now, but historically, when you put all that data together, you have elections basically every other year. Whether it's a midterm election or the full presidential election, you're going to get it every other year. Then we also have the quarter coming to a close. 2 weeks before the quarter closes, some funds begin to start rebalancing their portfolios. So we start to see this happening over the next 2 weeks. Now, we've been seeing tech rallying quite a bit. So if funds need to rebalance, they will take a look in their funds and say, well, we're only allowed to have 10%. We now have 14% of this particular security. Now we need to sell off 4% of that to be able to rebalance to get us back to where we're supposed to be based upon our weightings or whatever the funds do and how they're established and set up. That is what is going on. So if you see these rallies going on, that's why you will end up seeing sell-offs in these manners. So yes, we're getting a full market sell-off, but we will also start seeing some buying coming in the next week. So these are the things to pay attention to. So it's not any panic mode, nothing like that. This is absolutely normal for the market this time of year, normal for the end of the quarter, and the market is just reacting to and pricing in the rate cuts that the Fed is going to be giving us. So maybe the Fed does still come out in Q2 of next year and cut rates. The market will rally on that. Maybe the Fed does not raise rates again before they cut. Maybe they continue this pause going forward. That would make the market continue to rally also. The market is just pricing in what the Fed is telling us in a worst case scenario. That's all that's happening. So, again, not panic mode, not anything like that, nothing Tesla specific that's causing Tesla to pull back. It's just a macro environment situation. Now, some other data that we got in today were the jobless claims. Jesse posts out initial jobless claims came in lower than expected. Since we're worried about wage inflation again, this is seen as a bad sign because of a tighter labor market. So again, it's kind of counterintuitive. You would think that, less job claims means more people are having jobs. That's a good thing for the economy. But when you're looking at a time where you're trying to make sure inflation is coming down, if you have wages continuing to go up, you can get into a wage price spiral. That's where wages keep going up, so people keep on buying things. So then producers continue to go up on their prices, and prices just go up and up and up and up. You don't want that to happen. So they need to squash this a little bit. So we did see the jobs market soften a little bit last month. This here kind of gives the indication of, all right, maybe it's not softening as we thought it was. So that again is going to give the market a little bit of concern and kind of now reinforces the pricing in of another Fed rate hike coming in potentially November or maybe December. So again, we have to go data point to data point. The Fed's going to make that decision. But when we're seeing the jobs market like this still not being softened like they want to, that could give us reason to raise the rates. And now, speaking of jobs, in breaking Tesla news, Sawyer Merritt posts out breaking Tesla has revealed that once Cybertruck production is ramped up, that Giga Texas will have over 60,000 employees. They have 20,000 employees on site currently, according to a public presentation by Jason Shawhan, Tesla's director of manufacturing at Giga Texas. At the end of 2022, Tesla had 12,300 employees at Giga Texas. Coming into 2023, Shawhan said that Tesla didn't have enough parking for workers. To fix the issue, the company is now building a parking garage near the factory. Tesla has become one of the largest employers in Central Texas, ranking only behind grocery chain HEBLP, which earlier this year employed 22,955 people in the metro, according to ABJ List research. So this, of course, is great news. And Tesla here is bringing great numbers, tens of thousands of jobs to hardworking Americans and providing these great opportunities. So who knows what's going to happen after that? You start talking about Optimus, the compact car we know is going to be coming out of there, the next gen platform. So we may end up seeing 100,000 people working in Giga Texas alone. They have a giant footprint there that they have barely touched. That factory itself is enormous, and they still have a ton of land that they can build even more on. So this is going to be something that we could potentially see in the next 5 years, maybe 100,000 people working at Giga Texas alone. Awesome jobs to see coming in here. So despite the fact that we've got the market and the Fed trying to kind of soften the jobs market, there will be jobs available. And this is a great sign for the future. And in other great Tesla news, Tesla Newswire posts out Tesla Model 3 Highland. Early customers have just received an email requesting delivery location details. So we knew that this was coming. We had already seen the information about these Model 3 Highlands over in Europe ready to get delivered. Now it seems like they are going to begin. So based upon the information we got about China now approving them for deliveries, now we are on path for, I'm guessing we may see a few coming out by the end of this quarter, but we are most likely going to see the big wave of these starting to get pushed out and delivered in Q4. So now shifting over to demand, Farzad posted out, this study backs up notion Tesla doesn't need to advertise. They need to lower costs. 19% of US wants to own EVs. That's approximately 30 million cars. The current US EV fleet is approximately 1.7 million. Hard to believe they aren't aware of Tesla, likely waiting for the right price. And now Elon responded to this saying affordability is the top issue by far. So this is something that we've been discussing all year long. Interest rates going up makes it harder for people to get on these loans. People are now paying even more for these vehicles. They're paying 6 to 7% interest on top of the price tag that's on the vehicle already. Despite the fact that they can get the EV tax credit, you're still paying that money up front, and you have to wait till you file your taxes to be able to get that credit in return, but you're still paying this giant monthly payment. That's very difficult for a lot of people to swallow. So this here is the big piece why Tesla's been trying to come down on their prices. working on cutting costs for manufacturing and production to be able to lower the price of the vehicles themselves. So now we know that this has caused the entire automotive market to have shrinking demand this year. So it's not Tesla specific, but of course, EVs in some cases being hot. But of course, EVs being on that higher price end, yes, they have hit price parity on average, but there's still a massive market in that low $20,000 range that Tesla has not been in yet. And no manufacturer in the US really has any sort of massive supply of that vehicle price in that range. So while we may have automotive demand sale problems, there is massive demand for something else for Tesla going on right now. And the demand that Tesla has is for the machine that builds the machine. Sawyer Merritt posts out news. Thailand's new prime minister, Srettha said on Thursday he held talks with Elon Musk during a visit to New York and they discussed the electric vehicle industry. And I quote posted this: "So many countries want Tesla. That's the real demand. They want the machine that builds the machine." So for those of us who are long-term investors, you take a look at the fact that yes, the sales for Tesla have been growing nicely, but there's been that pressure because of the interest rates that the demand isn't as strong as it could be. But where are we looking in the future? You're not looking 1 year down the road, 2 years down the road. Let's look 5 and 10 years down the road. We have Tesla's factories that are in strong demand by countries all over the world. That is really where the bread and butter is going to come in. So you look past this window of short term high interest rates where people are struggling to be able to get to afford one of these EVs. Let's go down the road. You look down 2, 3, 4 years down the road, you have more factories out there that are being built in all of these countries. Now, interest rates come down. Now, the demand for the entire automotive market goes up. More and more people want EVs because oil prices have been going up. Now, more people can start to afford these. Tesla now has the compact car that's coming out. You put all of these pieces together and all of these countries who want these factories, that demand is building super strong everywhere. It's just a matter of as soon as we get that moment where prices start coming down, it's game over. We are already seeing that happening right now with ICE vehicles. The UAW is making it even more difficult for them. So they're going to have to raise prices or do something. They're going to lose profits, whatever it is. They're struggling right now. We're going to get through this. This is that gully that we were talking about previously where there's not going to be enough supply and demand. People are kind of limping by on whatever cars they can because they want to get an EV, but their prices are still too high. Working on this, getting production out, getting lower priced vehicles, that's coming. The demand right now is on the machine that builds the machine. We are going to have more of those built, producing more cars. So when the demand really picks up again because interest rates come down, they're going to have the production out there and be able to meet that demand for all of these consumers. Just wait, folks. The next 2 to 3 years are going to be extremely exciting. I'm still looking at 2025 and 2026 to be that point where we see the next giant parabolic jump in the stock price. And as I was discussing over on X earlier today, somebody was coming out and expressing their concern about why I'm not putting all of my money into Tesla as I had been. I was explaining to them my whole theory behind just that. I think the entire market, yes, we've got Cybertruck coming out. Yes, FSD version 12 is most likely going to get released within the next year, but the market and Wall Street don't understand that. Cybertruck's going to come out. It's going to be super exciting. Those of us in the retail side of things understand what the meaning of this is. Wall Street is looking at what dollars is it bringing in. It's not bringing in any dollars, so they're not going to price that in. Production is going to be slow to start. Elon already told us that. So we're going to get all that FUD news that comes out about, oh, Cybertruck is here, but look at how slow production is. We know that's going to happen. FSD is going to get put out in version 12, but it's not going to be regulated. So yes, that's going to be exciting. But again, Wall Street's not going to be able to put dollar numbers on this because they can't put dollar amounts on this. Market's only going to rally for a very short time, and then it's going to come down again. That's it. For both the Cybertruck and FSD, we're going to get market manipulator boosts out of it, and then it's going to come down until the true dollar numbers come in to push the stock price up in a true fashion. So that's going to be that 2 to 3 year window. When that comes out in 2025 or 2026, and we get to that point, we're also going to have the compact car coming out. Now we're also going to be in a better macro environment. We can get that euphoric run coming back as we saw in 2020. That's what we're probably going to see in 2025 or 2026, based upon the information we know right now. So none of this is financial advice. This is just my theory as to what we're seeing. And that's why I'm investing my money in passive income investments, because I want that cash flow coming in. That's going to give me even more money to take advantage of Tesla over the next 2 to 3 years before we get that parabolic jump. I can only trade so much time for money. But if I can have my money make me money while I'm trading time for money, that is where I'm going to have even more to invest in Tesla stock. That's my thesis. That is what I am doing. That's my investing strategy. So, again, not financial advice, but that's why I'm doing what I am doing. So, that's all I've got for you guys today. Let us know in the comments below how you feel about the stock movements. Have you been buying more? I know many of you have. Go ahead and share down below. Otherwise, thank you so much. I appreciate all of your support. Have a great one.